The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we learn here how to maximize leverage, minimize risk, and be one step ahead of the markets. If you got any questions, make sure to give me a call today. You can reach me right here at 877-927-6648. Again, that's 877-927-6648. And like we do each and every day, let's go ahead and get a market wrap for you on where everything is at right now. We got the S&P just up a half a point off of yesterday's settlement price. There we got the Nasdaq up 7, the Dow down 17, and the Russell up 1.7. So the indices basically sitting pretty flat at the moment. We also got gold. It is down 5 points on the day. We got copper flat and silver pretty flat on the day as well. Looking on over at the ags, we got corn up 4 points. The soybeans up 22.75 right now, up 1.6%, and they are the ones showing the big move of the day. And not much of a move, but still a big move of the day in comparison to everything else. We got oil right here. It is up just literally 10, 11 cents right now. And we got natural gas. It is up about 0.025, which is a little over 0.5%. And, natural gas has just been moving and shaking like crazy lately. And then looking on over, we'll check out the euro dollar, and I think we're about to roll over on natural gas anyway, so might even update that one. But euro dollar, we got that down 40 pips. We got pound dollar down 3. We got the Aussie dollar down 7. The U.S. yen up 13. U.S. franc up 34. And the U.S. Canadian down a pip, basically flat. So right now the dollar is showing some strength across the board, and that is weighing, of course, on the markets. We'll see how it ends up when the day is over. Also got the bonds ticking a little bit higher. Looking on over right now, checking out the fundamentals, as we like to do each and every day, like to see where everything's going, what's making the markets move. And we have a few reports that have come out, and let's see what we got right now. Well, for Tuesday, a little bit more busy, obviously a lot more busy than yesterday, where basically nothing came out. So we got a few things going on. We got the revised GDP out of Britain, came in at 1%, and it was expected to be at 1%, so no big shock right there. And but Britain did have a preliminary business investment report that came out at the same time, came in at 3.7 versus 1.3. So that number came in a little bit better than they expected on that, helped out some, but in the end, still, not much of a move there. The pound right now is basically still flat across the board compared to the dollar. And let's go ahead, we'll pull that up. I'll show that to you. We'll pull that chart up and look at it. And we can sort of see just how those announcements did have an impact on the pound dollar. So right here we got the pound dollar. And as you can see, the reports came out last night at 3:30. No big surprise, but with that stronger preliminary business investment report that came in better than expected, despite the better than expected number, we go down here, over here to 3:30, or 4:30, I'm sorry, when that report came out. It got pretty crazy right before that. I mean, you can see it's just pulled down about 25 pips. Finally, that report came out. It basically helped the pound dollar get a little bit of strength, pulled back down, pulled up quite a bit more, but then gave it all back before the day was over. And it's been heading down pretty much ever since the morning session right there. Then looking on over, we also have the inflation report hearings come out of Britain. Those came out at 5 a.m. and just created a lot of choppiness, but nothing major right there. And if we go a little bit further, we got the core durable good orders right here in the United States. And that number came in at 1.5%, which is a great thing, but still didn't seem to give much of relief to the market, 1.5%, with an expectation of negative 0.6. And so if we hop on over here to the S&P and we zoom on in to the report from this morning, let's see, I got to drop it because it came out there before the market opened. And we'll open up, we'll get rid of or show our highlighted session. And then we can see that report from the overnight. And right there, what we can see is, let's zoom in here, get a little bit closer. And we had the report come right out there at 8:30. It did come in good. It basically popped up and it was over in a matter of minutes. And it was done and it just gave it back. Came on back down, flattened out, tried one more rally, gave it all back up, rallied back to the exact same point, and then moved on back down again. Now looking on over, Bernanke also had a little speech going on at the same time. And that basically is just what caused the chop right there. And he came out, had his little speech, which he delivered remarks to the National College Fed Challenge Finals in Washington, D.C. And if you want to read more about that report, you can always check out the latest releases. But right over here under fedreserve.gov, you can go to News and Events and then click on Speeches. And then you can see that latest speech, the Economic Recovery and Economic Policy Report that he has put out. And they'll put the new one up there sometime later today, and you can get all the notes and transcripts on that. And beyond that report, we have one other report that came out here in the United States. We had a 10 a.m. report come out for the CB Consumer Confidence Report. That number came in even higher, so it continues to climb. Came in at 73.7, and it was 72.2 last time. It was 70.3 before that, 60.6. So, again, it's just been moving higher and higher and higher on that consumer confidence, almost getting a little bit too confident. But we can see that number. Again, it came out at 10 a.m., and right here when that number came out, let's see here, the market said, you know what, that's too confident, and it gave it all back. And but decided to go ahead and go back up to those levels and just flattened out. Really nothing happening after that report came out. No big report scheduled for tonight. There are a couple, medium-sized impact ones, but nothing that you necessarily want to trade based on. And then, of course, tomorrow we got new home sales. We got crude oil inventories. You got the Swiss National Bank chairman speaking. You got the New Zealand Business Confidence Report. And you also have private capital expenditures coming out of the Australian dollar. So plenty of reports coming out for you tomorrow that you can take advantage of. Again, you got the new home sales at 10 a.m., and they're expecting that number to come in right at 387,000. And then we have the crude oil inventory report that is expected to come in at 0.4. And last time they thought it came in at 0.8, it actually came in at negative 1.5. So it was a massive difference. So that can be a great oil inventory trade right there for you. And then the Swiss franc, you can have a nice U.S. franc trade right there, 12.15. And then, like I said, rolling on down, you got if you're a New Zealand dollar trader, you got 7 o'clock Eastern time. Problem with that confidence report is that there's really not an expectation forecast. So even though it's a high-impact event, you don't really have an expectation to play off of. And then going into the Aussie dollar, we are going to have the private capital expenditure report. That expectation is for it to come in at 2.1%. So that gives us our fundamental wrap-up. And the next thing we like to do is we like to go into basically these statistics. So fundamentals, step 1. Seasonals, that's step 2. We are in a bullish seasonal cycle for the next couple days. So we were yesterday, today, and tomorrow. And today, tomorrow, and Thursday are the big positive days that we're expecting a bullish seasonal tendency. Friday is a heavily expected bear market, okay? So that is basically been just the history, is the market on the last trading day of November is usually bearish. But these next few days, we get a little bit of bullish nature, and we're seeing some of that. I mean, nothing major right now, nothing to write home about. And, of course, everything being put on hold with all the things that are coming out. And we got the Greek deals going on. We got the Spanish deal going on. We got, the continuing Capitol Hill fighting over everything. And figure out what they're actually going to do over there. Hopefully they'll do something that actually has a real impact on the market. But I guess we'll have an impact either way, right? So we can ride it out up or down. And going on over, checking out, let me pull this up for you real quick. And what we'll do is we'll check out the deviation levels on the day. We'll scroll through the markets, look at them. They're pretty flat right now, so we're not going to expect to see a whole lot. This is definitely going to be an inside range, half deviation day. But just knowing sort of what to expect, having realistic expectations. Because sometimes you can get in there and you just get that gut feeling that it's going to fly. And, you want to make sure you keep all those feelings. The feelings are good. Gut is good. You want to use it. But you want to keep it in check, too. Something needs to have a little reality check on it. And so let's go ahead and pull that up and look at it. And if you want to get access to these, hop on over. And by the way, if you don't have a Nadex account or whatever, but if you don't have one, you want to get one. All right, it's a new era. I think everybody would agree that the trading world is constantly changing, and if you can minimize your risk and maximize your leverage, you're going to want to do that. And the whole name of the game in trading is survival, and survival is minimizing your risk. And then to make money, you got to use leverage. Why do you think all these banks use leverage? Okay, the banks make money ideally, so you want to maximize that leverage, but you got to keep that risk tight so the leverage don't cut you both ways. The way you accomplish that is with Nadex. And so just hop on over to TFNN.com, click on the Nadex banner, and then you can do two things. One, get a demo account. Click on our products, go to demo account, and then right under that you'll see a username, first name, last name, phone, and email address. Click apply for demo. In about 15 seconds you'll have access. They'll send you a password. You'll be able to log right in, and see how it works. Also, click on Create an Account. And you can go from start to funded in as little as 5 minutes. And there's only a $100 requirement to fund the account. And they don't have any commissions. They have exchange fees. The CME charges, I don't know, like $1.20 something, $1.23, whatever, for exchange fees. Nadex charges 90 cents for exchange fees. The big advantage is Nadex caps them at $9. So if you have 10 contracts, it's $9 in. If you have 100 contracts, it's $9 in. It caps it out for you. Being an exchange, that means your trades are anonymous. They're not making money off the bid-ask spread. The bid-ask spread is for other traders, and it's for market makers. But the exchange itself only makes money on the exchange fees, so your trades are anonymous. That's very important because it can get really dangerous out there when you're trading an over-the-counter style market where the other side of the trade is the one trading against you, and they can see your account and they know everything that's going on. That's not how it's working at Nadex. Nadex, again, is an exchange, just like CME, and they're actually registered with the CFTC and everything else the same way there. So definitely check that out. Get your account set up. Get going. Once you do that, hop on over, and you're going to need to get some education, right? How do you trade this? How do you trade these box spreads? How do you trade these binaries? And so you can go over here, and you can click on Diagnostic Box Spread Analyzer. Click on the logo there. You get 2 weeks, free trial, no risk. Get access to tutorials. Get access to Ask Me Unlimited questions. Get access to my diagnostic deviation levels. Get access to the live Nadex box spread scanner. I built it for my own trading, and now it's available to you, so you can use it as well. And it's very helpful. You go in here, you click on Spread Scanner once you're in your TFNN members area there, and you can literally say, hey, I want to trade the S&P 500. I want to buy, I want to sell, or whatever you want to do. And you can go in there, and even if you want to trade the Nasdaq, there's all sorts of possibilities for you. And you can go in and say, you know what, I don't want to risk more than $100 on my trade, and I want to have at least a $2 profit potential for every $1 at risk. And it'll instantly show you what trades qualify for that risk-reward analysis that you put together. And it's very, very helpful for me as a trader. I'm sure, I get reports all the time of traders that talk about how it helps them. Basically, it makes a better way to trade, easier to trade. And I'm going to go in here and to see if we get any more on there. But we'll do maximum risk, bring it down to 90. But it's really simple. Maximum risk, $90. Okay? So people look at this and they're like, oh, that looks really complicated. I can't use it. It is so simple. All right? So we're going to start fresh. Okay? I'm going to show you exactly how this works, and then we're going to hop into deviation levels after that. So first thing is, I'm just going to go in here, I'm going to click on Spread Scanner. So now I'm on the Spread Scanner. Now I go down here, I can choose any market I want. So I can trade the S&P, I can trade the Nasdaq, the Dow, the Russell, I can trade the FTSE, I can trade the DAX, I can trade the Nikkei, I can trade natural gas, crude oil, I can trade gold, silver, copper, corn, soybeans, Aussie dollar, euro dollar, pound dollar, US yen, pound yen, euro yen, US franc, and US Canadian. So you have a lot of markets you can trade. Something is always moving, and so you can take advantage of that. So if I go in there and go, okay, well, I want to trade the US 500, and you look at this, and this just becomes intimidating. Well, this is what happens if you're in the Nadex platform, and I wanted to get rid of all this mess and all this noise. That's why I made the scanner for my own trading. When we come right back, I'm going to show you how I use it to pick my trades. Derek, we'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. We're checking out how to limit your risk and maximize your leverage over on the Nadex platform. And so I'm going to go in and let's just say we pull this up. We're going to go in and look at 10-minute bars and look at what we got. So we got a setup right now. Looks like it's actually pulling down a little bit, so we'll be trying to choose what we're going to do. And if you log into Nadex, and I'm going to do that right now just to show you, but I mean, it can get really overwhelming. It is the best way to trade. Why? Because you minimize your risk and maximize your leverage. So that is why it is the best way to trade. At the same time, it can be a little bit complicated, and you really, as a trader, you don't have time for complicated. It's complicated enough to pick your direction. You don't want to be sitting there and figuring out, okay, now that I know what direction I'm going to go, I'm going to spend the next half hour trying to figure out, what I'm going to use to make money on that direction. So you go over here and you're in the Nadex platform. You signed up for your demo account, you're logged in, and you can go in here and you can click on, say, Indices Bull Spreads. And then you go down here, I want to trade the S&P 500. But then all of a sudden you got 3 choices here, you got 3 here, 3 here, 3 here, and 1 here. So you have 13 choices to choose from if you want to buy, and 13 choices to choose from if you want to sell. And that could, obviously, by the time you figure out which one, your trade could be over. You don't have time. And that can cost you money. Time is money. Time really is money in trading, right? So, you wait 3 minutes to execute after you get a buy signal. The thing could have moved 3 or 4 points. Could have cost you a couple $100 and, potential profit there, right? So you want to figure out how to make it fast, how to make it easy, so you can focus on trading well and not focus on calculating the best spread. So that's why I made the spread scanner. What this does, it feeds all the data live every second from the Nadex exchange right into the scanner. And so I go in here and I go, okay, well, I got the US 500. Okay, so that mirrors the S&P 500. And, inside our site, we teach you about this, but also over on Nadex.com, if you just go to range of markets, and let's say you're at stock indices, then you click on contract specs. So any one of the markets and then contract specs, and it'll actually tell you, okay, US 500 is tied to the CME, even the S&P 500 index futures. All right? So it makes it pretty simple for you. But you go in and let's say, if you pick a buy or a sell, whatever. So we'll pick, let's see, let me pull the chart up again. Right now it's in such a, up and down thing. Right? There's not just a whole lot of defined movement going on. But let me pull that chart up and we'll look at it. Let's see what we got. Right now, I don't know, we could say down, probably it can go back down here, go up here. It's really just in the middle. But, you want to take a trade. For whatever reason, your indicators tell you it's time to buy. All right? So we're going to go in here. We're going to look at the buy. And so we'll click on the word buy. Pretty simple, right? We clicked on US 500. We clicked on buy. That's all we've done. And by doing that, we just dropped half. We dropped all the sales off. So now we're only looking at basically the buy calculations on the spreads. And now we're like, you know what? I really don't want to risk more than $100. So we're just going to enter 100. Okay? Enter it and just click out of it. And then all of a sudden, it's going to get rid of all the spreads that have more than $100 risk. And then we're going to say, you know what? I want to be able to make at least $2 for every $1 I'm risking. So we're going to enter $2 right there. So reward to risk ratio. Click out of that. It'll drop out any that don't have the ability to make at least $2 for every $1 at risk. And you can even go in if you want to. I mean, you can make it tighter, like or a little bit looser, like 1.8. So that way, if something is, fluctuating between 1.9 and 2, 1.9 and 2, then it doesn't drop off. But we'll put that on there. And then now what it does is now instead of having 13, really 26, because you had the buys and the sells, 26 different ones, now it's narrowed down to 5 of them for us. And we can see, what spread we think will be the best trade for us. And we may go, you know what, right now it's lunch. I don't think it's going to move a whole lot. So I'm really not interested in these ones that expire in 31 minutes. Why would you be interested in one that would expire in 31 minutes? Why would you ever be interested in that? Well, maybe there's a news report about to come out. And when that happens, short term, you're looking at having a short-term trade. And so you just want to get in, you want to have a low-risk short-term trade, and so you could pick that. This one only has $6 of risk. It expires in 31 minutes. So that'd be a great trade for if you think there's about to be a big move one way or the other on a news announcement. But right now, we're like, you know what? No, I definitely want more time than that. So I'm going to go up here, and I'm going to say, you know what? I want at least an hour minimum for a trade. So now it's going to drop off all the ones that don't have an hour. All we've done, S&P 500, buy. Don't want to risk more than $100. Basically a 2-to-1, and we can go and change that. That's back to 2 there. So $2 profit potential for every $1 at risk, and at least 60 minutes till expiration. Okay, through the end of the day. Now I only have 3 choices out of the original 26, and I haven't done any math. Okay, so that can be sort of nice, right? And then I go down here and I look at the different possibilities to go, what's my best trade? And I go, well, this one has 90 minutes. These two have 165 minutes. This one's risking $12. And can make 84. And it has to move 3 points to expiration. This one's risking $15 there. Basically has to move the same distance, about 3 points, and it can make 281. Well, this one has more time. They have about the same risk and about the same move to break even. I don't want that one either. So we come back, I'll show you how to get that one off, and then we'll choose between the final one and figure out what the best trade is for you. Stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on there. We're coming on back into the show. What we're doing is we're checking out the spread scanner. So let's say you're wanting to go in and you want to buy the S&P 500. And what we did is we've done some very simple steps. Okay, we're inside the spread scanner here, and we clicked US 500. We clicked buy. We said we want to have at least 60 minutes for the trade, and we want to be able to make $2 for every $1 risk potentially there. And we want to have no greater risk than $100, meaning we cannot get stopped out, and our risk will never be larger than $100. So we go on down here to US 500, which again is correlated directly to the S&P 500 E-minis, and then we can look and see which ones are remaining. We have one that has 84 minutes until expiration. We have two that have 159 minutes till expiration. When we look at the one that has 84 minutes, that's the first one. You know what? That's a negative, right? Because there's less time for the trade. So is it better than the other trades that are available? And you can find out pretty quick. You're like, okay, well, these two both have to move about 3 points to be break even. This one's risking basically $16. This one's risking basically $18 at this point. It's only $2 additional risk on this one, and you get literally, almost 3 times the amount of time there. Well, about twice the amount of time. For only $2. And then the reward, this one can only make 81. This one can make 279. So, all things being compared, why choose one that has 84 minutes and less profit potential when you can choose one that has 159 minutes, only risk another couple dollars, and has a lot more profit potential? So we go on up here, and we're like, all right, well, the easiest way to get rid of this is a time issue is 84 minutes. So we're going to go up here, and we're going to say, you know what, unless it has 90 minutes, don't even show it to me. And so now we have only 2 choices left. And I'm going really slow through this. I mean, all you have to do is say US 500, buy. I want ones that are 90 minutes, $100 risk, $2 reward risk ratio, and it instantly be there. I'm just taking you step by step. And so now that we have that done, we go in here, okay, we got 300, 400 minutes till expiration, or 300, 400 wide, but we both have basically 3 hours, 2.5 hours to expiration. Awesome. This one has to move 2 points to be at break even, is risking $18. This one only has to move 0.7 to be at break even, but it's risking 48. This one can make 278. This one can make 348. Now, here is something that's really important that you understand, okay? Is just because the reward potential is there doesn't mean you're going to make it. All right, this would actually require to make $346 would require the S&P to rally up to 1440. Well, I don't expect that today. I'm pretty sure that you don't expect that today. And the deviations on the market don't expect that today. So really, the max reward in this case is not an issue to me. Okay, so I'm not even worried about reward. What I am going to look at is my reward risk ratio in dollars. Okay, I'm risking $17 here to make 278. That means I have a $14 profit potential for every $1 risk. Here I have a $7 profit potential for $1 risk. So even though I can make more money, I have to use more money to do it. So if I put the same amount of money in there, okay, so we got 48 points, we got 18 points. If I went in and did, say, 2 or 3 of these, then I would easily surpass the reward dollars. And that's why reward to risk ratio is important, because it lets me know for the dollars I'm putting at risk, how many dollars could I make? So for every dollar risk, I can make 15. For every dollar risk, I can only make 7. So reward risk ratio will always trump your reward dollars itself. So that right there makes that a much more attractive trade. So we have time till expiration, all right, and this one has a better reward risk ratio. Now the only thing that would make me hesitate, okay, also this one has lower risk, only $17 per contract. So I could go and I could do 5 of them and then be like trading a full S&P 500 for less than $100 in risk. And now the last thing I have to deal with is the break-even distance, okay? So this one has to move 2.5 points. This one only has to move 0.7. Well, why? Well, because this one is what you could call out of the money, okay? Basically, the S&P is below 1405. It'll start making money when it goes above 1405. So it's out of the money, so it has to move a little further, but also that's why I have less risk. Now, once it gets in the money past the price where I bought it, we're talking about a delta of 1. So if you're an option trader out there, this is like trading Friday options every single day, okay? Massive delta, massive gamma, basically no theta working in your favor. So, and if you're not an option trader, it's like trading futures without having to have a stop loss. So same thing for stock traders. So you don't have to you don't have to worry about Greeks, and you don't have to worry about theta, gamma, delta, vega, all that stuff. You don't have to get into it. You don't have to understand it at all to trade these. But just to help connect the dots for the option traders, imagine trading Friday in the money options. We're just barely out of the money options every single Friday. And option traders usually love Friday expiration options because you pay very little for them, okay? And they move really fast. They move a lot more like the underlying market once they're in the money. So understanding that, now you can do that every day versus just one day a week. And it gives you just a lot more buying power with it, a lot more impact. And like I said, if you're a futures trader, this is the same thing as trading futures, except for it has to move 2 points before I make money, or it has to move 0.8 points before I make money. And some people get really caught up in that. They're like, I don't like that at all. But let's think about this. It could also move 10 points against you, and you won't lose anything additional. Okay? And so that's obviously a huge advantage in itself. So you got to make the decision. Do you want it to only have to move like a point, and you're risking $45? Or do you want it to move 3 points, and you're risking $15? And so depending on how far you think it's going to move is where that's going to come into play on that decision. If you think it's going to move, 5 points, well, then, let's go for the 0.4. If you think it's going to move 10 points, let's go ahead and go with the 3.1 because we're going to get a better bang for our buck on that, all right? But really, that's the last choice you're going to make is the break-even distance because this one wins on lower risk, same amount of time to expiration, and best risk-reward ratio. The only advantage this one carries is it doesn't have to move as far to be at break-even, but since it's in the money, there's real value in it already because the S&P is above 1,400, then you're taking on that real value cost immediately. So you basically make your choice between the two, but you're only choosing between 2. We started off with 26, okay? So in a matter of seconds, you could have went in here and said, US 500, buy, don't risk more than $100, at least $2 reward potential for $1 risk, and I want at least 90 minutes till expiration, and bam, that's all you have to look at is 2 of them. And often, if I think the move is going to be a decent-sized move, I'm going to choose the lower risk trade that has to move a little more. If I think it's going to be a smaller move and I want to go into more sort of scalp it, then I'm going to go more for the a little bit more risk. But I mean, we're still talking $40, okay? And I mean, if you're talking 5 contracts, I mean, you're talking $200. All right, so a 4-point risk on the S&P. Most people are willing to take a 4-point risk on the S&P. All right, so with that, then not a big deal. You go in 4 points of risk on the S&P, but if it goes up, hey, you're making money right away, and you can close it out pretty fast. I mean, it works out really well for you. Now, maybe you don't like that trade. Maybe you want to check out the Dow. You just click Dow. All the settings are already there. And you can go in and you can choose, which one you like. And you're like, well, that's 47 points. That's pretty far, even though it's only $5 risk. So, you have the same sort of like thing going on right there. We can go over here to the small caps, check out the Russell. You go in here and, okay, so now we've got 2 out-of-the-money options. This is actually a great example, okay? On these 2 options right here, so let's say you want to buy the Russell. They both expire in 153 minutes, and they both only have to move 1.7 to be break even. So same distance, same amount of time until expiration, same distance to break even. The risk on both is $15. All right? This one can make 180. This one can make 280. So this one has a 16-to-1 reward-risk ratio. This one has a 10-to-1 reward-risk ratio. So all things are equal, but this one can make more money. So that's the one you want to choose. So now you go, well, why can't it make more money? Well, it's a wider spread. Notice how this is 200 ticks wide, this one's 300 ticks wide. So if it's wider, it can make more money on the way up. Now, I don't really expect the Russell to get up to 830 today, okay? If it does, though, why give up the potential $100 profit if, it doesn't cost me anything? It doesn't cost me time, it doesn't cost me movement requirement, it doesn't cost me additional risk. Why not put it on? So there's no other reason to put on the other spread. And, some people go, okay, well, why is it wider? Why is that spread wider than the other one? Well, this spread started last night at 6 o'clock. So you could have been in the trade at 6 o'clock trading it. The longer there is till expiration, so it went from 6 o'clock last night to 4:15 today. So it's wider because there's more time. So the longer there is till expiration, the wider they'll make the spread. And the shorter it is till expiration, the smaller they'll make the spread. So this other one right here, it started like at 8 o'clock this morning. Okay? So that's why it's only 200 points wide, 200 ticks wide on the spread. And people go, well, how do they set, okay, so it's always 300. Yes, at 6 o'clock it's always 300. At, 8 a.m. it's always 200 points wide. And what is this spread thing you're talking about? All right, another common question that comes up. Well, the spread thing is the floor to the ceiling. So like 810 to 840. That means I can make money above 810. I can't lose any money if I'm buying. I can't lose anything below 810. All right? I can't make any money above 840. The difference between 840 and 810, the difference between the floor and the ceiling, okay, that is the spread. So the difference between the floor and the ceiling is the spread. So 30 points, right, or 300 ticks is the spread. So, literally the spread between floor and ceiling. And if you click on here, we'll go in and you can choose, let's see, we'll pop over, I'll show you an example. And let's say you actually chose to buy this spread. It'll open the ticket up for you automatically in Nadex, as long as you're logged into the Nadex platform and you click on it. And then you can actually see floor, 810, ceiling, 840. Now that's also in the name of it, 810 to 840. It's also right here on the scanner, 810 to 840. And you don't have to worry about that so much. You're just looking at how far does it have to move. I don't care what the floor and the ceiling are, because that doesn't matter. What does matter, I mean, this is what that means. I care what does that mean. Okay? Now, what does it say, but what does it mean? Well, it means that it only has to move a point to be break even. I'm only risking $20 right there on a Russell trade and $276 profit potential. And, how good is that? Well, I mean, on the Russell, you're going to be risking $10 a point on a full-size Russell contract. Okay? So $10 a point. So if the Russell moves 2 points, you're going to lose $200 if it moves 2 points against you. If it moves 2 points in your favor, you're going to make $200. Well, on Nadex, every tick, all right, this is one of the simplest things. If you get this down, you basically have half the spread down. Every tick, you could call it, pip. Or if you're a stock trader, you're used to saying the word cent. Okay? So the minimum increment move of a market. So if you're trading Apple, the minimum increment move is a penny, right? It moves in pennies. So on Nadex, everything, and so that penny is, by the way, another name for that is tick. So what is a penny worth on Apple? Well, it's worth a penny. But if you only have to put up, say, half the amount of money, it's worth more. There's all these things you got to deal with. Margin. If you go over to the futures market, then you got ticks that are worth $10, $12.50. I mean, you just have all sorts of weird ticks out there. Nadex makes it really, really simple. And what they did is they said every tick on every product on Nadex will always be worth $1, period. So you don't have to calculate, okay, $1 for a tick. So what is the tick? The tick is the last increment it quotes in. So see, like right now we have 811.2 and then 811.6, so the bid-ask spread right there. So the 0.6, 0.7, 0.8, 0.9, as it moves a tick, that's $1 increase in value. All right? So if it goes down, that's $1 decrease in value if you're buying. But so it's always $1. So if it moves 10 ticks, that'd be a 1 point move, right? So if it went from 811.7 to 812.7, that'd be a 1 point move. It'd take 10 ticks because it basically, you could say it ticks in dimes. All right, that's how usually they talk about ticking in dimes and quarters. So in this case, it ticks in dimes because it goes, 811.10 to 811.20 to 811.30. So once you understand, okay, it ticks in dimes, and you don't have to even have a book for this. You just look at it, what's the last digit in the bid-ask quote. Okay? Once you know that, you know how it ticks. So, and they always, by the way, they always tick in increments of 1. Now, maybe 1 or 0.1, like in this case, we have 0.1, right? So 0.2, 0.3, 0.4, or 0.01 or 0.001, or let's say it's a, FX pair, 0.0001, like on the euro dollar, but it's always an increment of 1, and every 1 increment move, 1 tick move, is $1. Well, on the Russell, if you're actually trading the TF, so the Russell 2000 futures on ICE, then you're actually it's going to be worth $10 for a 1 tick move. And it ticks in 0.1 as well on the Russell 2000. And so if it moves 1 full point, then that's a $100 move because that's 10 ticks at $10 a piece is $100. Okay? So that's why a 2-point move on the Russell is worth $200. And that's why a lot of people are afraid to trade the Russell because only a couple points is a couple $100. Okay? And it can easily move 3 points against you and then move 5 points in your favor. And, now you're literally, you'd be up 200, but now instead you got stopped out of your trade. And you had to get back in and you have to deal with that whole mess. So over here, you trade on Nadex, that problem disappears. It goes away. And if I know that on Nadex, every tick is worth $1, okay, and it ticks in dimes on the Russell here, and so every point is worth $10. Remember, on the Russell, every tick is worth 10 and every point was worth 100. So I need 10 of them. If I do 10 of them, that makes every tick worth $10, just like on the Russell. So every tick is now $10 because I own 10 contracts. And remember, 1 contract, 1 tick, $1. So if 1 contract times 1 tick is $1, then 10 contracts times 1 tick is $10 a tick. And so now I'm trading just like I'm trading the Russell 2000 futures. The exact same thing, okay? I'm going in here, I'm getting on a 1 tick move on the spread price here, I'm getting a $10 profit or loss. On a 1 point move, I'm getting $100. On a 2 point move, I'm getting $200. So it's the exact same thing. I mean, you want to buy the Russell, buy this. You want to sell the Russell, sell the appropriate spread. So we go in here, and we got 10 in, and now our maximum risk on this Russell 2000 trade is $190. Our margin is also only $190. You're not going to get that kind of margin anywhere. So, and no matter what, no matter how far down the Russell goes, it could go down to 809, 808, 807, 806, 805. I will not be down more than $190. But if it comes above 811.8 by expiration, I can actually make money. Here, we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back to the Diagnostic Trading Hour. All right, so we're checking out this spread. And, you know, we have a bullish expectation on the market today based on the seasonal cycle. And the market, was basically closed up a little bit yesterday. We can see right there it came in and sort of pushed away at the end of the day there and came on up here to this spread right here at 810. And so you decided you wouldn't buy the spread. You could have started this trade last night. By the way, you could have went to bed and left the trade on and know that you could not risk more than $200, okay? You could also set your profit target. You could set it at 810, 815, 820, whatever. And when you did that, you put the trade on. And notice how the market came down, went back up, came down. We actually had a low right here, it looks like, of 805.6. Well, if you bought at 810 and it went down to 805.6 on a future contract on the Russell 2000, okay, you'd be down 4.4 points. So that'd be $240. It'd be $440. Sorry, $440 that you would actually had to go through that drawdown to actually stay in the trade. You were never down more than $100. or actually basically $190 on this trade. So futures trader stopped out or taking on a lot more risk and using more margin and having fear of what happens if the market falls overnight. You go to sleep not worrying about it, knowing that it can't hurt you more than $190 and that you could still be in the trade in the morning when you wake up. And so no matter how far it goes against you. So it goes down, it comes down, and then all of a sudden the market does actually move on up there, and it moves on up into 812.3. So you could have taken the trade off. You could still have it on. You have until the actual close at 4:15 in order to get out of the trade. And so, again, you can get out here. You can get out here. You could wait until the end. You can hold its expiration and put the trade on. So you have a $200 risk. You have a $200 margin. And you have all the way until 4:15 to actually be right about market direction, no matter what. So I hope you're starting to wrap your mind around this, okay? We did 10 contracts. We only risked $200. We had $200 margin. We cannot be stopped out of the trade. And basically what I call this is a stop loss without a stop trade, okay? So it stops your loss because you can't lose money below the 4. This is why I call it a box, okay? Like where I got in, where it expires, okay? So where I got in is the left side of the box. Where it expires, where I get out is the right side of the box. And then the floor of the box is at the bottom, okay? The ceiling of the spread is the top of the box. So by putting that on the screen, you actually can see what's my prop potential. Huge upside, all right? Massive upside right there. And, you know, I don't have to worry about the downside. I have all the leverage in my favor. I'm still making $100 a point, just like I am on the Russell 2000, okay? On a 1-point move, like 812 to 813 to 814. So every 1-point move, I'm still making $100 as the spread increases by 1 point. But I don't lose $100 every time it goes down a point past the initial 2 points I have at risk. And so I can trade. It actually can, it's sort of funny. It almost makes trading a little bit boring sometimes because you're able to relax. So when it's coming against you, you don't start going, do I get in again? Do I go the other direction? I hope it doesn't hit my stop loss. I don't want to get stopped out. What do I do if I do get stopped out? All those games you got to play are gone. And now you get to focus on trading well. You get to focus on profit management. And that's where I come in, and that's where I focus on the deviation levels. You get access to those, let you know how far should you expect the market to move on any given day. And you get free access to those with the Diagnostic Box Spread Analyzer as well. So 2 tools to help you maximize your leverage, minimize your risk, and be one step ahead of the markets when trading on the Nadex exchange. And, of course, they're helpful, of course, also if you're trading on futures. There's a lot of different ways to do this. We'll go into some more examples as the shows keep going on. But want to make sure that you do understand that we're here to help you and put everything we can in place. And if you have any questions, feel free to email me, dmartin@tfnn.com. I'll be happy to help you out and answer any questions that you do have. And go ahead and stay tuned right here. We got David White coming up next, and be a great show. So stay right there. We'll be right back after this break.